Hello. There's a Wall Street comment that says you'll be right and wrong when you're investing. Winning big is about how much you'll make when you're right, but it's also about how much you'll lose or limiting your losses when you're wrong. Over the last year, with COVID and the recovery in the equity market, there have been exceptional gains to be made. My name is Mark Kalil, and for the South African Lebanese Chamber of Commerce, I've been asked to do a summary of world market performance for the first quarter 2021. I'll be talking about US equities, South African equities, and then a little bit about the cross assets of gold, the rand, the bond market, and crude oil. Let's go. First quarter 2021, Wall Street, US equities. Look at the table on the left. Unbelievable. The US large techs showed leadership. If we look at this, there's three key themes. Number one, S&P 500 hit a record high, as did the Dow and NASDAQ. Point one, Apple broke $2 trillion market cap for the first time. If you go back 20 years to the dot-com crisis in 2000, only three stocks had a market capitalization over $300 million. Microsoft, GE, and ExxonMobil, your traditional stocks. Look at the top five now, the FAANG, the FAM, they call it. Facebook, Apple, Amazon, Microsoft, and Google. Isn't it amazing that the top five by value make up 22% of your S&P 500, $36 trillion value market cap? You go back 20 years ago, and the top 10 at the time made up 20% of your market value. So right now, we're just seeing the heavyweight blue chip techs leading performance like you cannot believe. If you look at something like the Russell 2000, which are the 2,000 largest small cap index that don't qualify for the S&P 500, their value is $3.4 trillion. Isn't it amazing that Apple and Microsoft make up combined $4 trillion? So these are showing the way. In the first quarter, it was very mixed, the performance you can see, but over the year, there's been gains of up to 100%, doubling your money in the heavyweights. Look at Tesla, down 6% for the first quarter. That's the stock along with SpaceX, which made Elon Musk the richest man in the world. He's now number 2 to Jeff Bezos because Tesla came off from $883 to currently $635. The other key themes, the banks finally rebounding and the cyclicals and economically sensitive stocks rising. So mixed performance first quarter US equities. On the right, South African equities, amazing story this quarter. JSE All Share hits a record high on the top 40. On the Resi, Resource 10. On Platinums, we've seen positive follow through from the South African budget. The rand firming to 14.50 currently from a record low of 19.35, and it's showing in our stocks. In the first quarter, we've had a rebound. Naspers up 23%, MTN up 42%, Sasol up 66%, and Aspen up 21%, just on the basis of viral containment and the rollout of vaccines. If we go on to the next page, South Africa, and we look at the benchmark indices and sectors, if you look at the table on the bottom right, it's basically your laggards, the ones that have been underperforming in 2020 that have driven the first quarter performance. Chemicals up 55%, led by Sasol. Travel and leisure, City Lodge, Tsogo Sun up 27%. Construction, PPC, doubling itself right now. All of these on the hopes of a pickup in economic growth. Higher equity means there's less chance for debt restructuring in the case of PPC. So things are looking good. Telecommunications up 26%. MTN was up 42% in the quarter. Real estate eventually showing that there could be life in terms of occupancy and sales. So very good first quarter for your cyclicals, your economically sensitive stocks. If you look at the losers, it's been gold. Your South African gold equities have come off about 40% from their highs, and beverages are down in the first quarter. If we look at the tables and the graphs on the left, your all-share index hitting a record high looks very, very positive. If you look at the foreigners being net sellers of South African equities and bonds, yes, foreigners are still sellers, net sellers of 140 billion rands worth of bonds from a year ago. But when the news of the vaccines in August came out last year, it's basically holding its own levels. We're talking about foreigners buying SA Inc. When they come in, we should expect the market to rally. On the last page, we're just going to look at the other asset classes, 3 points on each. Number one, top left, spot gold. Swift and brutal retreat, pulled back from its highs. Spot gold is down 17% from its record high of 2067. South African gold equities, we said, are down 40% from its highs. If you look at the gold ETFs, where the retail investors have been buying, for 3 out of 4 months now, you started to see outflows. So you're seeing profit taking and consolidation on gold. Technically, 1700 is a very strong support level. So it's volatile, it's a little bit jittery at these levels. On the Rand, look at the Rand, up 31% from its record low of 1935 last year. Positives coming from the SA budget. In the first quarter, the Rand is up for emerging markets, 21% 1 year return, and that's actually beating your Mexican peso, your Indonesian rupee, and your Chinese renminbi. So on a 1 year recovery basis, it's currently number one. That's looking good. Bottom right, South African bonds, we've seen stabilization. There's a pickup in your primary and your secondary auctions, like we call it. There's a good opportunity for the foreigners to do a carry trade with actually getting good South African real rates of return we talk about. The Reserve Bank is actually looking to lift interest rates. So we are forecasting 0.5% hike this year, with the repo rate going from 3.5% to 4%. And if we look at crude oil, 10% off its highs, but you'll see the graph there, hitting record lows. Unbelievable what happened in COVID. WTI oil, which trades more in the US, went to minus $41 a barrel, and Brent crude, $18 a barrel, which was an 18-year low. They've both gone above $60 a barrel. At this stage, they're consolidating. We're looking, the negatives, I guess, is the oversupply from OPEC and Iran, and on the positives, you're looking for a rebound in the US and global demand picking up. So it's been a very volatile first quarter. It's been very good for the equity market. Equities are still beneficiary from your fiscal injection of $15 trillion coming for COVID relief. If we look forward, the focus is going to be on viral containment, the rollout of the vaccines. If you're looking for stock picks at this stage, Warren Buffett said it's far better to buy a wonderful company at a fair value than a fair company at a wonderful value. So there's good stocks out there with strong management, strong balance sheet, good price to earnings ratio. Stay safe, stay well. If you're focused, if you're invested, just stay focused. There's a link for the South African Lebanese Chamber of Commerce. If you want to register, please do. The views presented by myself are from publicly sourced data and not representative of my company. Thank you.